Hi, and welcome to the Rags to Riches show with myself, Terry Blackburn. Now, today's guest is a guy called Dale Smith. He's from the Northeast, so it's always good to interview other local people. That's fantastic. Really experienced guy, actually. 15 years in the property industry, everything from residential to commercial to holiday lets. He has a group of companies which involves 6 brands, including Host and Stay, over 200 employees, on target for 25 million in turnover in the year ahead. He has a personal portfolio, around about 50 units. So he's doing really, really well. I think it'll be a fantastic episode filled with knowledge, gems, and some lessons for the listeners. So welcome to the show, Dale Smith.
Cool. No, thanks for having me on, Terry. Great to be chatting with you this morning.
No problem, mate. Thank you for coming on, mate. I really appreciate it. I know you're a busy man, for sure, getting up to all of this. So thank you for coming on. So what we like to do on the show, Dale, is sort of talk about your career so far, broken down into 3 main parts. So the start, just a quick part about how you actually got into doing what you do and how you got into property and set up all these businesses. The middle part is what everyone loves to hear about, which is the growth part. So any key highlights of that part, going from 0 units to 50, and God knows how many you actually manage across all of your companies. But a little bit about that growth and any key lessons on there. And then just the current, where your head's at now, what your attention is on, where you see your group of companies going, going forward. So if you could start by telling us a bit about the start first, really, Dale, how you got into it and how it all came about.
Yeah, totally. So my dad first getting involved in buy-to-let property, I think it was around 2003, something like that. Purchased a property off plan not far away from where we lived at the time. I ended up getting my own first buy-to-let property in 2006, which was the year I was leaving for uni. So I actually studied in the US, played a bit of golf at the time, got a golf scholarship. Nice. So went out there in 2006, had a buy-to-let apartment at that point in time. So that got me on the ladder at that perspective. And then once I came back from the US in 2010, started working full time. So I actually went into the motor industry, which is where my family background is. Said I would never get into the motor industry, but did. So once I started working full time, my dad and I were able to start investing together. So that's the point we started to build up the portfolio. So 2010, when I came back, we were mid-recession. So we didn't do an awful lot till probably 2012, 2013. And we started investing on the buy-to-let basis. So, purchase, refurbish, refinance where we could. My dad had done a little bit of that pre-recession when it was quite easy and you could do same-day refinance and the good old days when anybody could make money no matter how much they knew or how good they actually were. So probably around 2013, 2014, we started to ramp up what we're doing on the buy-to-let perspective. Got into a little bit of commercial in Saltburn, which is where we're from and where we're based now, at that point in time as well. And then it was 2016 that we got into the holiday let side of things. So we bought a little bungalow in Saltburn, literally yards from the beach on the S Bank for anyone that is in the Northeast and knows Saltburn well. And we purchased that really on speculation. It wasn't moving. There was some issues around the property, hadn't really been looked after for a lot of years. So we bought it, not intending for it to be a holiday let. We bought it because we thought it was a good purchase and we could, again, refurbish it and revalue it. And then we said at that point in time, right, let's have a go at the holiday letting side of things. We haven't done it yet. Revenue looks better, potential for better ROI. And we thought, right, let's test the market with it, the position if it's perfect. So that's what we did. We launched Burnside in March 2017. And everything has gone from there really on what we now do on the holiday let side of things. That launching of Burnside coincided with me leaving my commercial job. So I'd worked my way up in the motor industry from being a marketing executive to being commercial director at Peter Vardy, which runs a number of dealerships up in Scotland. So the buy-to-let portfolio and the bit of commercial we'd added had let myself and my dad, move away from full-time employment to focus on property. We didn't know what the plan was going to be at that point in time. We just both knew we loved property and wanted to do that full-time. Burnside launched March 2017, and we've really gone from there. we couldn't find a holiday let agent that offered the service we wanted. We wanted a full management service. We didn't know anything about holiday letting at that point. So we wanted someone that could do the booking generation, do the guest communication, manage housekeeping, manage maintenance. And that solution just wasn't out there in the market. So we said, right, we'll do this one ourselves. So my background is sales and marketing. So we put it on Airbnb, we put it on booking.com. We started to generate bookings. We did some of the cleaning ourselves. Plus we had some local people that we utilized for that. We brought a maintenance guy on because, again, with what we had on the residential side of things, we could have a maintenance person part-time that could look after our residential stuff and Burnside as well. So that was really the grounding for us in what we now do day to day in the host and stay business. That property, it was a good deal. We bought it at 180,000. We spent around 70,000 on it. It got its first revaluation at 325,000. So we added a good chunk of value on that. And that property today generates around 65,000 per annum in revenue. So, as an ROI, it's probably still one of the best deals we've ever done.
That was the first.
Kind of the key to the door of what we do now, ultimately. Yeah.
Fair play. And you said it was sort of speculation that made you sort of look at it. What is it around the holiday list? Because I mean, I've, as a lot of the listeners will know, I've sort of ventured into SA the past couple of years quite heavily.
Yeah.
I personally think it's one of the best, if not the best, cash flowing strategy you can have. I find it quite enjoyable as well, because kitting out these properties to a really nice standard. You don't do that on Biolets and HMOs, right? You don't kit them out to that degree. But what is it for you that appeals about SA, and what would you say the main benefits of SA is?
I think for me personally, because I'm very sales and marketing focused, I love that about the SA and the holiday lets, that you can manipulate price on a daily basis. You're right, interior design's a massive impact. Photography is a big part of booking generation. We play around a lot with that. So there's so many factors, and dials you can turn to actually get a performance out of it. Whereas the buy to let and the commercial is, you already know what your market price is for your AST 2-bedroom property in whatever location. There's not much you can do to achieve more than that, or certainly nothing that is going to actually give you a really good return on investment over and above what you would already get. Whereas with the holiday lets, the interior design could make the difference of £10 a night, which across 265 nights of occupation is a massive improvement on the bottom line. Same with the photography, the same with the description of the property. So all of these factors are the bit that I'm really passionate about for what we now do in host and stay, and they're the bits that really attracted me to the holiday let side over and above just the standard residential and commercial stuff. Don't get me wrong, the commercial property is far and out the easiest and the simplest way of getting a return. It's certainly if we've got stuff like most of ours where the tenant's on an FRI lease, and it's kind of over them to do what they're going to do. But in terms of running and managing things day to day, that the holiday let gives you that, I suppose, that buzz and that excitement, and actually seeing output for what you're doing.
Yeah, I think that's a good point as well. Do you still do buy-to-lets or HMOs or anything like that, or are you all SA stuff, or what's?
We've never got into HMOs, just where we're located, Terry. To be honest, we've been based out in Saltburn and Coastline, and we don't see a massive market for it, so it's something that we've never got into. But yeah, we'll still add little bits of buy-to-let and commercial when they pop up to the portfolio. For us, it's about diversification as well. I think we've seen that over the pandemic period. Holiday lets have had low lows and high highs, but at least the buy-to-let portfolios continue to be steady. Same on the commercial side of things, that's been pretty steady for us as well. So yeah, we'll still add properties to the portfolio where opportunities come up. I think that's the thing for us now on the purchasing side. We will still buy properties that is on market, but a lot of the time now we're getting little deals off market. It might be a building where we already own several apartments, which is what we've done recently. The last apartment in the block, the vendor wanted to sell, so it made sense for them to sell to us. So we'll pick up little things like that now, really, rather than always buying off market. But yeah, we're always still looking to add to the portfolio.
Still looking good. Fair play to you. So how's it went from Burnside to quite a large portfolio personally, and how many do you actually manage for other people? I mean, it's obviously quite a large organization, but
so we manage just over 500 in the host and stay portfolio at the moment. Aiming the game this year is to double that to 1,000. So everything we've put in place really across certainly the last 6 months of last year, last quarter of last year, is to get that infrastructure in place to double the growth again this year. But yeah, so we went from Burnside in 2017. We added another holiday let the back end of 2017. I think it was December time. And then at that point in time, we started to get other people we knew who had holiday lets asking us, oh, well, they saw what we'd done with Burnside and asking us to start and manage for them. Again, purely on, off spec, really. It wasn't our intention to immediately go down that route. And then by December 2018, I think we had 9 holiday homes, combination of our own stuff and then others that we were managing for other people. Because it's probably worth saying on Burnside, when I had all the other holiday let agents come out, they were giving us quotes of income of between 20, 25 to 35 per annum. And we're doing, more than double that now. So our ability to generate revenue versus the competition has been one of our key selling points, really, and why a lot of people have moved over to us. So we had 9 units December 2018, and that's when we launched the host and stay brand. So we thought at that point, we're getting some demand for this. We want to do more ourselves. More people are looking for the type of service we're providing on the management side. So we launched the host and stay brand that December. By the following December, we'd increased the portfolio from 9 to about 65, 70 units. And then from there, we've pretty much doubled each year. So from December 2018 to December 2021, we finished 21 on exactly 500 units. So we've gone from 9 to 500 in that 3-year period. And say again, we're going to try and double again this year. But for us, it's about the full management side of things. So everything we do for our owners is in-house. So, our marketing team, our booking team, our guest services, our owner services, our maintenance guys are employed by us, our housekeepers are employed by us. So for us, it's about having that end-to-end service, but all of it's sitting with us, because the vast majority of our competitors, outsource to third parties on the operations side, where that can lead to quality issues. It's kind of pass the buck in terms of if there is a problem. Whereas for us, we very much see as, we want to own it from start to finish, which works from us from a financial point of view, but also an owner knows if there is a problem, it's our team they're dealing with. We're not saying, oh, well, you need to speak to so-and-so who's a housekeeper and having multiple parties involved. So that's really been our USP as a brand, is that, we are true full management service through our own team.
No, I love that. It makes sense for you as a business, but it also makes sense for the owner. It's better for them, right? Yeah. It's better for the guests as well. So it's a win-win for everyone. And I think in business, that's a real key thing to try and create it in every situation that is possible. This win-win. And I think just fair play. Why do you? I'm just curious into the mindset behind this, because I'm similar in terms of we doubled the business during COVID, my main business. We're aiming to double again this year. What's your mindset behind that though? Why doubling? And is it just, is there a main focus, a vision? What's the driving factor behind DL Smith?
I suppose we're still trying to find what does that end destination look like, and I suppose if there is one, we're having conversations at the moment of where are we in 3 years' time? Are we still a private business at that point in time? Is the partial exit at that point in time? Do we go down the route of going public? So those are all discussions we're having right now to try and say, right, what targets are we going to set for the next 3 years? Because say the last 2 has all been about growth and adding more brands to the portfolio. And I suppose our driver is from a client point of view, we want to be able to service them end to end. So across the SDDE Smith Group now, we've got Smith Legal, which is our legal business, mainly focused on conveyancing. Just about to open our second office now in Spennymoor as well for that business. So that's growing quite nicely. We have Styled, our interior design business. Again, that's come through us doing the design ourselves for our own properties, but clients asking for that service as we've developed Host and Stay. So we brought our design team in-house November 2020, launched Styled as its own brand last year. So again, that's a year of growth for our interior design business, because we want to bring in a lot more external work rather than just solely rely on what's coming in through the Host and Stay business. We have our construction business, Woodsmith, which does both residential and commercial projects. Again, so that could be working on a property that is for ourselves, or a block of apartments which is for ourselves, or it could be working for external clients. And then on the management side, we've got Host and Stay if the property is going to be a holiday let. Then we have Manhattan Property, which is our residential, commercial management, and also sales as well. So from a real estate perspective, let's call it, we can be full service and want to be full service for a client. So if they're looking at purchasing, it can come through Grace Smith and go all the way through each of the brands in the group before it's then output onto one of the management platforms. So for me, it's really starting to extrapolate that out as a wider group and a wider service business. That's where the passion is for me, really looking and saying, right, okay, is that another service we need to add? Is that something we need to bring into the group so that, gives us another entry point for a client, but we create the stickiness to keep the client within our brands, basically.
You've done all this in how long? 2017, 2018?
Yeah, so Host and Stay was the first brand. So yeah, over the last 3 years. So
it's fair.
A lot of the businesses have, last year was a big year for us starting new businesses. The construction business we'd done bits of in the past, but we brought Gary, one of my good friends from school, in-house to join us in that, and we created a startup. Gary runs that business. We turned over, I think, just over 1.2 million in the 9 months that we operated last year. We forecasted about 8 million in that business. That's going to be a big contributor of group revenue growth this year. And we've won some pretty big contracts in that business as well, with Anglo American, British Steel as well. So, that business has gone from strength to strength in the first 10, 11 months of operation. And the same with
what type of business was that one? Sorry, where you got your friend involved?
Construction.
The construction side. Sorry, I didn't hear that there.
So we could do anything in there. It could be a 30, 40, 50,000 pound refurbishment, could be a ground up build, or say again, we're doing 7-figure projects up with commercial providers as well. So it's a real breadth of different projects, but again, it gives us another string to our bow from a group point of view.
I was just about to ask around that, as in, what's this, not necessarily the specifics of the structure, but to scale it at that rate. Surely you've had JV partners, you've brought in key team members. What's your sort of views on growing teams? And you're obviously very good at that, because you can't go from 0 employees to 200 in the scale that you've done in such a short period. So what's your views on building teams and the importance of it, and how you can done that?
I think it's interesting. We're having a conversation yesterday because we were looking at expanding what we do on the housekeeping and cleaning side of the business, and we're looking at a smaller business in Ripon to come into the group, and they've got stuck at the point of got about 50-ish properties that they're cleaning, and they kind of don't want to take the risk of going past that growth curve of saying, right, we need to now start and bring an awful lot more people and infrastructure into the business so they can continue to grow and actually work on the business. So I think we've always been, I certainly have always been aggressive in terms of bringing the people in early and then forcing the growth of the business to make that work. So I think it's really difficult to think, oh, well, I'll bring someone in when I reach this point, because you're still doing it all yourself. So I don't think for us, it's always been interior design, the example. We were doing that ourselves. We were reaching the point where we couldn't do it ourselves. We were looking at bringing one person in. The two people that interviewed for it were both fantastic, so we brought them both in at the same time. So that team was supposed to be just a person. It started off as 2 people. It's now 4 people. But actually, on the face of it, we brought 2 in, and actually the business grew in line with that quite quickly, because we were able to go out and say, not be worried about bringing another project on. And I suppose we're always looking for good people, Terry. I suppose that's the key thing in terms of the brands that we've got. We're now at the point we need the right people in there to certainly take us on the next few years of growth, and the teams will change shape, and people will move around, I'm sure, over the coming years. But it's been about getting, for us, passionate people who want to come in, passionate about what they do, and then try and build the teams around those. But certainly I think the key for us on the growth side is bringing the personnel in early and taking that risk and saying, right, well, can you force the business growth to need that person or outgrow that person to then keep on growing the team? I think that's a lot of the issues I see with people who are struggling to scale their business, is actually taking that step to go, bring someone in. Yes, it eats a chunk of profitability out, but if you're going to grow, you've got to kind of force it past that.
I think that's a really interesting point there. And I think most people anyway, certainly who I speak to, they do it the other way around. You kind of touched on it. They'll say, when I get to this stage, we'll take on this member of staff. You're kind of saying the reverse. We'll take them on early and force the business, and then you've got the capacity, then you can scale quicker, opposed to, because what happens if you get to that point where you need that member of staff, you can't recruit. I don't know if you're having challenges recruiting at the moment. We certainly are. I think personally right now, it's probably harder to find good people than it ever has been, certainly the time I've been in business. But you're right. I think that is a mindset shift, that recruiting them early, forcing the growth, I think is a really good point. Have you read the book Who Not How?
I haven't actually, no.
I don't know if you read that. That's very similar. That I've just listened to the audio recently, and that's all about this. It's about, who can you get to help you to get to where you want to be, instead of thinking, how can I do it myself?
Yeah,
it's all about building teams. I think that's some great advice. Thank you for sharing that.
No problem.
Clearly from someone who's doing what you say, you told your employees, and that's a scale over that period is fascinating. So you've obviously went through this crazy trajectory, doubling, 2-3 years in a row. What's next for you? Where do you see your group of companies? I know you mentioned maybe flotations and things like that, but have you got like an end goal? Have you got something you'd really love to achieve? I mean, the 1,000 properties, that's probably a bit of a milestone, I guess.
Yeah, definitely. I think 1,000 properties will certainly be a milestone for us. We want to keep on growing the host and stay business, so we're mainly focused in the north at the moment. Gradually, we're trying to move further south and further west, because a lot of what we do is Northumberland, northeast, down the North Yorkshire coastline. So I want to keep on growing and scaling that business. So and we've just recently launched our licensing and franchise program, which will help us do that. So we've got a lot in the pipeline this year to really push that growth from a host and stay point of view. Ultimately we want to keep on growing the units on that business. So 1,000 this year, really want to try and get to 3,000 by the end of 2023, which is where the licensee and franchisee programs are going to be crucial to grow in that side of things. And then across the other brands, really, again, continue growth. For the interior design business, we want to be one of the biggest interior design businesses really in the UK, focused on SA holiday lets. We're moving into a bit of commercial stuff as well and doing some residential. But our expertise is in the holiday let and SA side of things. So we're trying to put a push on growth in that market this year. And for me, really, it's keeping on expanding the brands. I think ultimately we will bring other aspects of the business in-house. Same as mortgages and insurance is something that we've looked at, because it's a perfect fit for what we're doing. All we're trying to look at all the time is saying, right, when it comes to property, what are the points our clients are having to go out to another third party and not use one of our businesses within the group? And is that something we actually can bring within the group? So whether that be, architectural work, whether that be finance and insurance products, we're always looking to say, right, what else can we bring in that gives us that full complement, so that we can keep people within group? Because again, if we look at valuation further down the line, it's trying to really create that unique offering from an investor point of view to say, right, why would they want to invest in our group of businesses, whether that be, private investment or whether that be flotation, what's going to attract someone in. So that's kind of the vision that we're working towards now. I don't know what that end goal looks like. If you ask my family, they're always saying, when do we start and stop, or where is the end goal? For me, it's kind of just an ongoing continuation of growth and evolving and adding to the group, Terry, really.
Yeah, fair play, man. Fair play. I love that. It's never ending improvement, isn't it? And never ending progress. And if you, I don't know, I imagine you're probably similar mindset to this. Every time I set a goal, before I've even got there, when I know I'm going to get it, I've moved the ball. I moved the goal as soon as you're almost there. So then you never really get that I've done it feeling, because and if you do, it's like next. What's the next thing? And it's that mindset thing, isn't it? And dwelling on a win is a dangerous thing, I think. And getting complacent, I think, is dangerous in business, because there's always somebody younger, smarter, quicker, whatever. Totally snapping at your heels, isn't there? You've got to keep your eye on the prize and keep going forward.
Totally right.
Let's just. I think you're clearly an expert in SA, I would say, based on the amount of years you've done it and the amount of things you've probably experienced in properties you've managed. So if we focus on the SA, trying to add value to the listeners, what makes a good SA to you? If anyone's listening, because a lot of people reach out to me, so I imagine you get a lot more than me around SA, asking questions about SA. Where should I buy? What type of properties? What area? What does it need? What does it not need? What's your advice on that? And maybe just some guidance on SA properties in general.
I think location is certainly key. So if someone is looking and investing from scratch and they are open to locations, I think locations is the first thing to look at. Our portfolio is very heavy towards tourism, so very much holiday lets versus serviced apartments. Say ahead.
That's my fire alarm going off. Hope it's just a test. Jesus. Sorry, mate. You can tell this is not scripted. It's live. Sorry, mate. Hopefully it doesn't go off again.
No problem. So I think we are very heavy on the holiday let tourism side of things. So we see distinct difference in performance for a property that's right on the coastline to one that's further inland. But I think location is absolutely key. So if it's going to be an SA apartment in Durham or Newcastle, keeping it northeast focused, then is it the right location in those cities to be attractive to a potential guest? I think for us on the holiday side, it would be location. Has it got a view? Does it have parking? Then what are all the amenities that you want? So hot tubs, personally, not a massive fan of those on the management side, because they do bring some issues.
Why is that?
They generate an awful lot more revenue, or have potential to generate an awful lot more revenue, but they can also cause a lot more disturbance and call outs and such. Like, I see a lot of people having a property that they want to make a holiday home, and it's in quite a residential heavy area, and then adding a hot tub and people drinking and in the hot tub at 1 o'clock in the morning causes more problems than realistically what you gain from a profitability point of view. So I'll often say to a client, if it's a rural location on its own, or you've got a few properties out on their own and they all belong to you and you're going to do something, then fine, crack on, go for it. But if it's going to be a hot tub in a residential location, stay away, because it's going to cause you more problems than what you're going to gain from it ultimately. But certainly, amenity is the other big factor of it in terms of what people are looking for. What I'll often say, people ask me, is this location good? So if a client already has an existing property, or their budget doesn't allow them to invest in a really hot spot, then I'll normally say to them, make it as good as you possibly can internally, because that's what people are going to book off. So that's where the interior design really comes in. So it could be a box standard apartment in a block of apartments that are not necessarily attractive externally, but if the interior design is right inside, then that means your imagery is going to be as best it can be. And ultimately, that's what people are booking off. That's what's going to generate the bookings, and people are spending time, inside the property. So, don't get caught up too much on location if you can't affect it. Don't get too much caught up on the externals if you can't affect it, but the inside of the property you can. So really focus on that interior design. We work on a rule of the first 4 images in our listings. That's what we play around with. So what's the first image someone's going to see? Because that's going to get you the click. And then what are the next 3 images they see within 15-20 seconds of scrolling? because at that point in time, after 30 seconds, they're going to be making their mind up of whether this is a property they're going to shortlist and go on to book or not. So imagery is the one single point of difference versus the vast majority of SA operators that will stand you out from the crowd. And actually, if you play around with that, it'll give you more conversions and potentially higher revenue as well. So
that's great advice. Again, I'm just thinking about on Airbnb. I stay in Airbnbs quite often if I'm traveling. Like it is normally the first 4 you've normally skipped. If the first 2 to 4 isn't, you have skipped, haven't you?
Back at that point. And I suppose we do it on right. I mean, I'm guilty of it still on Rightmove. You go down Rightmove, and I suppose if you're looking for a deal, arguably we shouldn't be looking at the properties that have got the best first image, but you do as a consumer, you're attracted to like, oh, that one looks nice, I'll click on that one. And it's the same thing if you're utilizing OTAs to generate bookings for SA and holiday let, that first image is absolutely key. And you know, for us versus some of our bigger competitors in the market, where they actually lead with external imagery first on a lot of occasions, I think for us that's give us a real advantage. So we very, very rarely, you know, less than 1% of occasions will we lead with a first image on a listing. It'll always be an internal image, and that image will vary based on size of property. You know, if it's got a view, then that'll be in focus. If it doesn't, if it's a 5-bedroom plus property, it'll always be a communal area where people can see themselves getting together as a group and having dinner or having a drink or whatever it may be. So playing around with that, you know, for even the smallest of operators will have a big impact on booking and booking conversion.
Love that. I think again that's cracking advice for anybody looking to get into SA. Would you say, I know it does depend on whereabouts these places are, but would you say more rural stuff or more city centre stuff? Because I speak to people, they do a lot of SA in city centres because they rely on contractors. People come to cities for breaks, but then there's the counter argument to say people want staycations in the country and away from the city centres. Is there any preference from you personally, or any views or opinions on that?
I suppose I would put it back to diversification. So from a personal point of view, our portfolio is diversified across location and size, because again, we want to hit as many of those markets as we possibly can. I think through the pandemic, we definitely saw rural and coastal locations come back first, then the smaller towns such as the Durham, Harrogates, Yorks, where let's say a little bit more history and culture to them, or the towns and cities where you go and actually go out, you know, and walk. If the shops were still closed, you could still go out and enjoy the city and, you know, go walking and kind of see what was going on from that point of view. Places like Leeds and Newcastle we saw come back an awful lot later, and I don't think we've seen them fully come back yet versus where they've got potential to get to. So coastal rural has definitely performed better on that basis, and those locations where they're heavily tourist focused, we find we've got a better propensity to drive higher ADRs, so average daily rates. So people are willing to pay more to stay in properties in those locations, because it tends to be a tourism or a leisure trip where they'll pay more for that. If we look at the city centre stuff, again, better opportunity to drive longer bookings, which in theory could generate more profitability because you've got lower operating cost of housekeeping and maintenance services. I think with the cities there is a bit more competition around price. So as I said, if you're operating in city centre, what are you doing to stand out above the crowd that's going to get someone to pay a little bit more to stay with you versus staying with a competition that is more in that, you know, that middle market? Our focus has always been top 15% of the market. That's where we've wanted to operate. So 4 and 5 star properties is our core demographic and core audience that we're going for. So in our SA, more urban SA properties, we're still not really going after the lower end of the contractor market. We're going for more top end up to, you know, what I would call corporate market in terms of the guests that are staying with us. But, you know, back to your question, is one better than the other? Not necessarily. I would have said over the last 2 years, coastal and rural has definitely been better because people have been traveling for leisure and they haven't been traveling for work. But back to the point, if you're looking to build a portfolio, I would 100% say diversify across across those different markets. Because the thing I like about the urban stuff is you can appeal to tourists, to contractors, to corporates, to parents traveling to see children at university. So you've got a real cross section of the market. When you go down rural and coastal, you are 95% plus tourism and leisure trade. So the market you're targeting is much smaller. So our focus there is, right, well, can we take a bigger chunk of that market? But I think ultimately diversification is key, and product is key as well. I'll say, no matter where your location is, if you're going to put a fantastic product in whatever given location, you will generate revenue, you will generate bookings if your product is right.
Yeah, and I think that's cracking advice. Because there's people online saying one or the other, but you're kind of impartial in this, and I think you've got a very validated, you're experienced enough to you manage 500 properties. I mean, you've probably seen every type of property in every location, certainly northeast, northwest, or wherever. So I think that's it. It's coming from an experienced person. So what about size of property then? Is there any views you've got on that? Whether it's I've heard people say 2 beds is where it's at, and you put a sofa bed in the living room so you can sleep 6. Some people say it's all about the bigger ones. You'll get less bookings, but it's more profit. All this. What's your viewpoint on that, on size?
Probably again, diversification. If that is the key. We've always looked at. So if you take the 1-bedroom market, 70 to 75% of stock is in that market. Easier entry point, so naturally you're always going to get more in that market. The one nice thing with the 1-bedrooms is that you've got a much shorter lead time from point of booking to check-in. So you've got more opportunity. You're not having to get the calendar stacked out far in advance to generate revenue for it. So if you've got 1-bedroom property and you get it going live, you've got real opportunity to drive bookings from 5 to 7 days out and get it going pretty quickly. If you've got a bigger property, you need a longer run in to actually get that first booking that's going to check in relatively soon. Because with the 1-bedroom properties, you've got that short check-in to booking to check-in window. Long property, you've got an elongated window, people booking well in advance. The 1-bedroom properties we see perform pretty well all year round, so we see less seasonability on those. Right, okay. So if you take November, December, January, which are the quietest months for us in the tourist areas, the 1-bedrooms still do okay in those periods of time, because a couple can think, okay, weather looks all right this weekend, let's get away Friday, Saturday night, and you can get that last minute booking. Your 4 and 5-bedroom properties, you're not getting that last minute trade. If it's not booked out probably at least 30 days in advance, the likelihood of generating a booking is really diminished. However, on the bigger end of the scale, the 4 and 5-bedroom properties, there is an awful lot less stock in that market. So again, speaking from a personal point of view, we have a lot of bigger properties in our holiday let portfolio. And the reason we've done that is that we feel if we can get the right product in that market, we can just take a bigger chunk of that market, because the competition, you've not got as much supply, so there's less competition. Where in your 1-bedrooms and your 2-bedrooms, there's way more supply, there's way more people getting into the market and go into that end, because it's an easier entry point. There's more stock, there's more availability. Where on the bigger stuff, there's less stock to buy, there's less stock to rent if you're looking at doing rent to rent. So you have got a real opportunity in the bigger properties to do it right and take a big chunk of the market. You just have to know that in the lower months, you're going to be, it's going to be more difficult to get higher occupancy. But that said, some of our own stuff, if the product's right, you're still going to get the occupancy as well, because there is still people traveling. If you take the chunk of the market, you're still going to have good occupancy. So there's no, same with all this, Terry, there's no silver bullet. Ultimately, if someone was getting into it and they have got the capital to invest in bigger stuff, I would say, and if they're going down the holiday route, I would say, go for something bigger, do it really, really well, make it exceptional. You'll get a fantastic return. And also there's longevity there as well, because you're creating a destination. So you've got a higher opportunity for those guests to come back again next year, because all of a sudden it's a place they love going to. Whereas your 1 and 2 bedroom stuff, which is really a commodity, there's not necessarily a real tie or draw for them to come back and stay with you again in that property next year. Whereas your big stuff, you can actually create that customer loyalty around them as well.
Yeah, I love that. Again, some cracking advice there. Mike should call you Diversity Dale.
Yeah, yeah.
Diversity, that's the key to everything.
Like that one.
Dale like Diversity Smith. That's cool, mate. Thank you for that. Just one last question around SA, because I think this is adding huge value to the listeners, this. So you mentioned amenities at the start, and you mentioned parking at the start. Is there any real things that you maybe personally would not take on an SA in your own portfolio if it didn't have X? Is there anything like that that's like an absolute non-negotiable in your SA? I
suppose we would always put it in. So if I looked at something the internals, so, fridge, freezer, washing machine, or washer, dryer, dishwasher, those type of basic amenities, I would say you always want them in place. Certainly if you're doing SA, again, at corporate or contractor level, it depends where people are generating bookings. If they're using bigger sort of booking agents, travel agents, or corporate booking agents, they're going to have minimum requirements on those type of amenities that they want in place. So I would say you always want to make sure that you've got those. There's an interesting one around dog friendly or not. Again, vast majority of our own stuff is always dog friendly. Coastal and rural, we see around 45% of bookings want to bring a dog. So that's a key factor in terms of booking generation, revenue generation. Maybe not quite as prevalent in urban stuff, but again, it probably would be a factor if you are dog friendly versus not. I would kind of hedge my bet on that you would generate more revenue if you are dog friendly versus not. And parking depends on location. So for me, if we take Whitby, which is one of our biggest areas in terms of volume of properties, if a property has private parking in Whitby, that's a massive tick in the box, and that property will very likely perform better than one that doesn't. But on the flip side, people coming to visit Whitby know that parking is a premium and that it's not going to be a given at the place they're staying, so they're used to that, they know that. So it's not a deterrent on our side. If a property hasn't got parking, that's the norm. If it has got parking, that's a premium factor. And I would always say if a property doesn't have an amenity internally, we'd be looking to say, right, we need to put that amenity in. If it hasn't got a certain amenity externally, so does it have outdoor space or doesn't it? If it doesn't, then I would always prefer that it does have outdoor space if it's a leisure guest that I'm trying to attract. If it's a corporate, probably doesn't really matter. So it's back to how good's my internal product over having that amenity missing, really. So hopefully that helps a little bit. It's a little bit roundabout way, but hopefully that helps. No, definitely. I think it's, again, these are questions that I regularly get asked, and I think I'm sure you do too. I think it's just trying to add as much value as we can on this episode to people who want to get into SA. No, that's great. Thank you again. Thank you for sharing that. So, I mean, I suppose I've got quite a lot of questions, you see. I want to just try and squeeze them in. I'm just trying to think which ones will add as much value as possible to people. We've covered location, we've covered types of properties, we've covered bedroom sizes, we'll cover the style of them as well. I was going to ask around, but we kind of covered that. You've said that interior design is really, really key to it. The first 4 photos, again, I think that's cracking advice. The dog friendly stuff, they've done the non-negotiables. Yeah, I mean, what I would say next is kind of around what you see for, there's a lot of people talking about the staycation boom. It's going to stop when COVID stops. People are going to go abroad again. Everyone's dying to get away, all this type of stuff. Yeah. What's your opinion on it? And what do you see for the staycation boom? Do you think it's going to stay around for a while? Do you think it's here to stay forever? Do you think it will dip? What's your sort of view on it? So I think pre-COVID, we were seeing year-on-year growth. So we'd only been operating a short while before that, but we'd seen from what Burnside was doing 2018 versus 2017, 2019 versus 2018, other properties in the portfolio, we were seeing year-on-year revenue growth. Occupancy, we weren't necessarily seeing lots of occupancy growth. But what we were seeing was, right, we can edge rates up a little bit higher. So we were learning from the previous year, thinking, right, we sold out too quickly there. Let's hold rate a little bit longer. We can generate more revenue from the same asset. So we were definitely seeing an upward trend. That's obviously been accelerated through the COVID period, or certainly in the summer months it has been, with being able to generate more occupancy at higher rates. I think we'll still continue to see that, because I think we'll have seen a lot of people that have stayed in the UK over the last couple of years that maybe go away a few times a year and think one of those, we're going to stay in the UK and explore other places. So I don't think we'll see a big dip at all in terms of occupancy dropping off or anything like that. I think the industry, if we take the short let industry in general, it's still in its infancy, really, versus where the hotel market has come over decades and decades of growth. The holiday let side of things, or the SA side of things, is still quite immature. So I think we'll continue to see people move towards that product versus choosing a hotel. If we look at the hotel market at the moment, we've got a lot of big players in the market starting to put service departments into their product mix. That's becoming more and more prevalent, which leads to think, right, they're seeing future growth, and all the data and analysis they have, they're seeing that they have to start and play in that market if they're going to maintain or even get some market share back after a big drop off. I think also we're seeing a lot of convergence of different sectors. So one of our latest additions on the brand side of things is Co-Stays, which is our play on the urban market. So we're on that business, we're looking to operate bigger blocks of apartments, focus more on that cross section of different types of customer, from leisure, tourism, corporate, contractor, etc., but provide amenity on site such as gyms, working space, podcast rooms. So we're looking to say, right, what if someone's coming to stay with us in that brand, can we keep them on site in building to do everything they need to do from a living and work perspective? So really giving them a service living experience. And I think we're seeing a big move towards that. I think we're going to see, kind of the amenity that you'd expect in a hotel merging with HMO, merging with SA. To be quite honest, we're seeing that a lot in the US. We're starting to see a little bit in London. I think we'll hopefully start and see it flood north a little bit. People that want to stay somewhere for 3 months because they are more transient. I think the generations coming through, behind you and I, are more likely to, just want everything inclusive in a price. Think I can go stay there for 3 months. I don't have to worry about utilities. I don't have to worry about someone cleaning my room and getting my linen changed. That's all done for me. I can stay there 3 months, right? Then I'm going to move on to the next city and do that. Or we're going to see this more transient type of guest and probably tenant, I think. So that's where we're looking at a few years ahead to really say, right, where do we need to position ourselves for that? It's kind of a hospitality approach to the residential sector, I suppose. So I think we're going to see
really interesting that.
We're going to see growth in the SA sector. I think we will continue to see that, but I do think we'll start and see a lot of these sectors start and merge and combine together as well. So we're doing quite a lot of work around that at the moment. It'd be interesting to see where that heads. And I was going to say something else now. I can't think what I was going to say on the growth side, but yeah, I don't see it dropping off, to be honest. I think regulation is probably the biggest risk, if you want to call it a risk, to the sector. We saw it with HMO licensing. 100% we're going to see the same thing in England. Certainly we already see it's being passed in Scotland. We're going to see that come into England as well, which for me, I think is a positive. I think it's too easy at the moment for someone to stick a property on Airbnb. You could have a family with kids in there and it's not being, set up properly from a safety perspective. So we need some regulation within the industry. 100%. I've got no issue with a licensing side of things, because it's just going to knock out the poor operators are going to disappear and it's going to keep you good operators. So I think for a lot of people, that's going to, there's going to be risk that comes with that. But I think if you're a good operator, it's a chance again to elevate yourself and get above the competition, really.
Yeah, I love that. I'm in complete agreement with you on that. I mean, like I mentioned, I stay in Airbnbs quite regular because we're traveling, and I'm in between sort of Chester and Newcastle quite often because my partner's in Chester and my businesses are in Newcastle, so I flick around quite often. And some of the places I've stayed in, like they're definitely not. And these aren't cheap places either. I'm not like going for the bargain ones, you know, the good couple £100 a night, 200-300, whatever. And still some of them, like, the product is poor, and it would hopefully knock out a lot of the cowboys and would let the proper operators flourish, like you mentioned. I think I'm definitely up for that as well. And I love what you said about that mix of SA, HMO type thing. I mean, I can visualize that when you said it. It's some really quirky, modern communal area where people can work. I visualize like the Google office. Have you seen the Google office with all the chalkboards and AstroTurf? And that's what I visualized when you said it. That'd be fascinating if something like that happens. And I think if it's happening in the US, a lot of the time it comes over here eventually.
Yeah, definitely. We're seeing quite a lot in certainly in the London market. There's a lot of, you know, core living blocks that are coming about, and they've got that amenity on site. There's one in Manchester, and I can't remember the name of it. I'll try and find it. I'll send it over to you afterwards, and you can share it out after. And they're all, theirs is core living. They've got a running track on the roof. Everything they have in their gym, everything's branded. So, you know, very Instagrammable. And they're creating a bit of a cult following, I suppose. But people, there's waiting lists to live in that block. People, you know, just aspire to live in there. And I think we're gonna see more of that come to fruition. Definitely, that, especially if people have been to uni, they've stayed in purpose-built student accommodation, you know, high-end stuff. They're used to that. They're then leaving and getting into the working environment. You know, what's the next move for them? Are they wanting to, in theory, they're not getting on the property ladder straight away. Are they wanting to, in theory, downgrade to a standard rental that they've then got to try and, you know, bring to life if they can do, or what have you? I think having that next step for them to go into a different level of, let's call it HMO, that has really got that on-site amenity. It's got the gym, it's got the place to work, and it's got a real community around it with those communal spaces. We're seeing a lot of places that do that have community events as well. So I think we're going to see a big shift on that, and hopefully we'll see some of that in the north as well.
Definitely. No, I love that. Dale, it's been a really, really interesting episode. I think there's been loads of value in it. For sure. I'm sure you get loads of messages. I'm sure people will reach out to you off the back of it. But the show's called the Rags to Riches Show. But what does being rich mean to you? Because being rich can mean so many different things. You can be rich in time, money, assets, whatever. But what does that phrase mean to you when I say it?
I think for me, freedom to do what you want to do. And also, you know, the enjoyment of what you do. You know, everyone asks me, why, you know, I'm always on doing something, which for me, that's the bit I enjoy. You know, that's the richness for me, is to be able to grow these businesses, to do that. I get a buzz from it. I'm passionate about it. That's the love for me. That's the difference. And I think even if we sold up tomorrow, I'd still want to do something else. I still want another project, because that's what drives me ultimately. And I think if you can find that for me is the Richard side of it. You're not sat doing something you don't want to do. If you're doing something you're passionate about and you love, that's the key, 100%.
Love that. Definitely. Why not do something you love? You have a choice, right?
Yeah, absolutely.
So why do something you don't enjoy?
Yeah.
Dale, thank you so much. If people want to reach out to you, if people want the advice, if people want to follow you, if people want to message you about hosting stay and see how that service works, what's the best way for them to reach out to you?
So you find me on LinkedIn. Hit me up on LinkedIn. My email is dale@sddesmithgroup.com. Drop me an email. You probably find me on Instagram. I think it's Dales_88 on Instagram. So yeah, any of those channels, drop me a line. Love to chat, help wherever I can do. I'll always try and add value for people.
Amazing. Dale, thank you so much. Have a great rest of the day, and thank you for sharing so much value.
Cool. Thanks, Terry. Thanks for having me.
Thanks, mate.